Welcome to the Venture Clash Entrepreneurship Podcast, where we meet entrepreneurs in the digital health and FinTech spaces. Together, we'll hear real-world stories, gain practical insights, and discover the amazing things happening behind the scenes of thriving early-stage companies making their mark. It's time for the Venture Clash Entrepreneurship Podcast.
Well, hey everybody, I'm Kenny Jang. Thank you so much for joining us for this installment of the Venture Clash Entrepreneurship Podcast. I'm excited today because we are getting deep down and dirty with some of the entrepreneurs in the FinTech, InsurTech, and digital health startup spaces with this podcast. Today, I've got the pleasure of having a conversation with Jeff Weikert of PayVeris. He's a fantastic conversation partner today. You'll see. I think this will be a very interesting journey that you'll see that PayVeris has gone on to get to where they are today. Before joining PayVeris, Jeff spent 30 years in the financial technology sector in a variety of executive roles. Firms that you've heard of before: Deloitte & Touche, Bank of America, SunTrust, Deluxe Corporation. He has been around the block and is a veteran in this space, and now he's applying his expertise leading PayVeris in this FinTech venture startup. So Jeff, welcome to the show today.
Thank you, Kenny. We're glad to be here.
So as we get started, I shared a little bit about your background. Why don't we start with you personally? Just tell us a little bit about what is your story. How did you come from these big box, giant companies of the industry to a venture startup? Tell us a little bit about that, Jeff, journey and venture.
Sure. So, yeah, you're right. I spent a long time working for larger, well-established companies for the first two-thirds of my career. I had about a 10-year run at CheckFree, which was a smaller company back then that ended up growing to be a billion-dollar company. We were acquired by Fiserv. And I had a chance to sort of step back and change gears. My kids were getting a little bit older, going into college, and I had a chance to sort of get off the merry-go-round, if you will. And I hooked up with a startup out in Silicon Valley that was doing a real unique solution around smart payments, and they were called Variant. And I thought, why not? They were really a pre-revenue startup back then, and had a real unique solution, and small company, about 12 people, and I had a chance to spend 3 years there. And I think that's when that was around 2007, 2008, I started there. That was when I got the bug to work at more of a startup type environment. It was fun to go out in the market and challenge yourself, using your network. We were going after financial institutions and large entities like American Express and Chase and Discover. Right. And I spent 3 years there, and that's really when I think it got into my blood. After I left there, I had a couple of other stints at different companies, and then the opportunity at PayVeris presented itself, which really allowed me to get back into what is a young company that has a lot of promise. But also get back into payments, which is really what I enjoy doing the most.
So you didn't see any big culture clash going from corporate America to a 12-person startup to these small enterprises?
Oh, for sure. You tend to get in the bigger companies. The reason companies like ours exist is because of innovation. Yeah. Big companies end up getting large base of customers, and rightfully so, they manage those, and they tend to have trouble innovating. And that's why all these companies are popping up, and all the money is being poured into FinTech, especially because there's lots of ideas out there, and the big companies have trouble taking those ideas and making them a reality for a variety of reasons. So I think the ability to create an idea and be able to run with that idea and then pivot along the way, that gives you that flexibility, and it takes away a lot of the friction that you have with a big company, where you have to go to a committee to present your idea, then you have to compete with all the other departments, and then you have to get funding for your idea. And a lot of times there's not enough money or resources to do what you want to do, and so you're kind of stymied. And in a startup, in a small company like PayVeris, we're blazing our own trail, and we can attack opportunities a lot faster. So we're more agile and faster, and we're able to do things in the market that the market's really asking for.
Yeah.
So that's a big difference, I think, the lack of friction you have in a small company, and being able to pivot and move fast.
Yeah, I don't think I've ever met an entrepreneur who misses those days of committees and big meetings and all those layers of bureaucracy.
Yeah, that is something that I don't miss either. And in the startup, you also, I think, in a big company, you kind of sometimes get lost in terms of the impact you are bringing to the company. So you might have a spectacular day, but the real sense of satisfaction you get isn't as great as you would get in a small company, where here, if you have a good day, you're actually affecting the future of the company in a big way, because there's only 25 people. So you're a big person. Every person is a big percentage of that company versus, 50,000 people where you're kind of lost in all that.
Yeah,
so
exactly.
I think that sense of satisfaction is much, much greater in a small company.
Oh, very well articulated there. I think that significance piece is huge. So tell me, let's talk about a little bit about your company. What does your company do in the fintech space? What problem are you trying to solve, and what's the actual service of delivery that you are promising to your customers?
So we are a digital payments company, and we sell our services to community banks and credit unions in the United States. And there's 13,000 banks and credit unions in the United States, so it's a big market. And our mission is really to make those community banks and credit unions relevant again in the payments domain. So if you think about what's happening in the market today, those kind of institutions have been around for a long time, and they were started, a long time ago, and banks were started a long time ago when people were trading, chickens for goats and things like that in terms of currency. And obviously it's evolved over time, and now we've got, Bitcoin and plastic and things like that. But our mission is really to allow those banks and credit unions to provide their customers, who are consumers like you and me and small businesses, with a better user experience when they go to make payments. So if you think about how things have changed in banking over the last 20 or 30 years, we didn't have iPads and iPhones and smartphones not that long ago. But today, a lot of people do their primary banking through this device or an iPad, and they do it whenever and wherever they want. And so that digital experience is super important right now for the banks to offer to their customers. Mm-hmm. And what's happening for those banks is they're getting squeezed by the technology companies, who are largely unregulated, the non-banks. So if you think of like Venmo and PayPal, they're really not banks, they're really not regulated, but yet they're doing a service and a function that the banks really had owned for all these years, which is allowing me to move money from my account to make a payment to a person, to a biller, to a merchant, or maybe moving money to my own account, at another institution. And so those banks and credit unions are worried about, getting encroached. They also have to worry about the big companies like Walmart, that really isn't a bank either, but people go in there to do banking type functions.
Oh, yes.
And then if they're small and smaller regional size FIs, they got to worry about the mega banks, who do have the resources to create these, take advantage of these devices and create these better user experiences. So we come into play as really we call ourselves payment plumbers. We help the FIs through partners and on a direct basis create those better digital experiences, so they can offer their customers a premium experience.
Wow, that's interesting. So you come in as a white label solution, basically.
Yes. We are sort of that behind the scenes service. So when you go out tonight to make a payment through whatever device you prefer, it's a ubiquitous experience. If you're on our platform, whether you're using a phone or an iPad or your laptop, it's going to be the same experience for you, and that gives you the total control and flexibility that you're going to want as today's consumer. People still go into branches, but it's becoming less prevalent, right? I can do everything I want to do tonight in the comfort of my home with a device of my choice. So why not let me do that? But you got to make sure the experience is really premium, right? Because if you think about younger people, millennials, they grew up with the smartphone in their hands. And so they tend to rely on that to do just about everything, right?
Yes, definitely.
Whether it's shopping online or researching something or just communicating, but now banking. So there's a lot of pressure on the community banks and credit unions to up their game in that regard. And we're there to help them.
That's fantastic. Yeah, I remember we were opening up an account locally, and it was we were looking at some local banks, and the thing that was the deciding factor was, do they have a mobile app that allows me to deposit the checks at home with the camera?
Yes.
And if they didn't have that, then they were off the consideration list, right? And so it's amazing that there's a need for that, and companies like yours is stepping into that space.
And what's happening, Kenny, is the legacy providers that have been around for a while, that have been servicing these FIs, they tend to be slow to innovate around some of these things. And so what happens for we deal with a lot of C-level executives at financial institutions, and 15, 20 years ago, they didn't have to worry. All these solutions didn't really exist, and the devices didn't exist. So it was a simple world back then. You had branches, and you might have branches in grocery stores, and you might have a call center. And then one day the internet was birthed, and you could create a website and provide some information and maybe offer bill pay and online banking. It was pretty simple. Today, when that same C-level exec wakes up, now he's got a variety of different payment offerings that they offer to their customers, but they're all built by different vendors at different times for different purposes. And so they're sort of cobbled together, and they're not really on one platform. They're certainly not a ubiquitous experience. So the customer might do something online through their laptop that works different, looks different, feels different than when they go to their mobile experience. And that's a problem, because people don't want that. They want the same experience across all devices. There's a term in our space called omni-channel, multi-channel. It's sort of that, same experience no matter where you are and what you're using. And that's really where we come in and offer an open API platform on a single platform that solves that problem that they have today.
Wow, that's interesting. So you came in at what point in the actual timeline of product development and this company itself? And then where's the company today? How many employees? Where are you in terms of sales or customers, et cetera?
Yeah, so we've been experiencing some phenomenal growth in the last 2 quarters. We've added 100 clients, which is awesome for us. We're up to about 175 customers now, all across the country, all banks and credit unions. That's our space. We're built by bankers for bankers. That's what we like to say. The company's 5 years old now. It was birthed out of Webster Bank in Connecticut. That's where the platform started, really. And the bank there invested a lot to create this great platform that had all these solutions on a single platform. PayVeris was started when that platform came out of the bank, and we were able to offer that same platform, but in a much more upgraded, enhanced way to other banks and credit unions in the United States. And so today we have about 25 employees. I mentioned 175 customers. We also have 21 partners, and we use those partners as distribution arms. So they might offer banks and credit unions things like mobile banking, online banking. They might be core processors. And so they take our capabilities and they build them in and embed them within their capabilities. So if it's a mobile banking company, they want to have payments on there. You want to be able to use your phone to do your banking, but also get e-bills, make payments, transfer money. So they take our functionality and they embed it within their solution, and then they go out to market and sell their solution to banks and credit unions, and we go along for the ride. And so that's our model.
So who do you see as your biggest competitor? I think on the consumer level, Venmo and PayPal are on the rise in terms of individual peer-to-peer transactions, but I don't think they'll ever be a serious competitor to what you guys do, right? Because the banking transactions is what you guys center around. Is it the bigger banks that have invested in these mobile apps and this platforms on the back end, or are there other disruptors that you're keeping an eye on right now for the industry?
Yeah, there's a lot of firms that are coming out with the next new thing around online banking and mobile banking, and we are partnering with a lot of those firms, so they are the disruptors and the movers and shakers in the space. And we feel like we are the mover and shaker in the payment space. Before us, there hadn't really been a digital payments company created in 20 years, almost 20 years. And so it's time now, with all the new technology and the capabilities, for a company like ours. So traditionally, we compete with the big conglomerate FinTech providers, companies like Fiserv, Fidelity. And these are good companies. They have lots of banks. They have thousands of different offerings. They're global. So they have a lot of things to worry about and sell to banks besides payments. All we do is payments. So in a traditional sense, we do compete with those guys. We kind of view it as a David and Goliath story, though. And we're David. But if you've read the book David and Goliath by Malcolm Gladwell, you know that David had a lot of advantages over Goliath.
Oh, yes.
He was faster. He had more modern weapons. He had a different kind of a vision. And so his ability to be agile and maneuver really was why he defeated Goliath. And we're the same way. We have a modern platform versus our competitors. We're very quick in what we do. And we also have modern weapons, which is our open API platform. So that's who we compete with directly. Indirectly, though, if you go to talk to your typical bank CEO and you say, what are you worried about right now?
Right.
They're worried about a couple things. One is they're slowly losing their franchise on payments. You've got the Venmos and the PayPals that are basically coming in, and they're taking control of that bank's customers and saying, hey, why don't you use my app to move money from your account to another person? Yeah. Well, that used to be the bank's turf, and now Venmo and PayPal and companies like that are coming in. And it's because they're finding the customers where the customers are, and they're offering the customers something they're not getting from their bank.
Definitely.
So a bank executive would say, I'm worried about the non-banks. And in our market, the regional and community banks are also worried about the mega banks. They're bigger, they have more resources, they have more wherewithal. So we're basically coming in saying, look, we can help you with all of that with our solution. And there's definitely a need. We hear over and over again, the frustrated C-level executive at a given bank is saying, I want to create a better user experience, but my legacy provider doesn't offer me that. And so I have nowhere to go. And we say, well, now you do. You have PayVeris, and we're on your side. We're bank-centric, bank-friendly, and everything we do is through the bank. And it's pretty simple. People still trust their bank. They may complain about their bank, but they still, by and large, will always go back and trust their bank. And that's where you do, you put your money, you manage your money, you pay your bills. And so we just want to provide better tools and a better experience for those customers so they stay at those banks.
Definitely. Yeah, I think you're right, is that they want hassle-free, high-integrity, mission-critical experiences that are flawless, right? So amazing. So what about on your rise to the top of this, FinTech empire, you've had some obviously partners that you've relied on or had support from. Can you tell us a little bit about some of the other organizations or partners out there that has been helpful for developing your story into a successful one?
Yeah, that's a great question. So when the company started 5 years ago, it was really totally predicated on using distribution partners. We have a little bit of secret sauce in the way we do our funding of accounts that is unlike what anybody else does. And so it's incumbent on us to get relationships with other providers who already have established customers and bases and services, and we just become part of their solution. But payments are pretty critical. If you think about your own behavior when you go log into your bank, more than likely you're going to be going in there to make a payment or to move money. Now, you may be in there to find some information or to do a service, maybe order checks or something like that, which not many people are using anymore. You're more than likely going in there to move money. And so we're in a perfect place right now because that's what we do. We're a money movement platform. So some of the partners that we've, and you can look on our website, and folks can look on our website, they really are the folks with the modern solutions, companies like Malazai, who offer a really robust mobile banking solution. They're just like us. They're funded by investors. They're going out to the market. They're filling a need because by and large, the banks don't have really good mobile solutions. That's a problem. And that's why people are, going to these other providers. So that's one example of a company that we really work well with that is out there offering a really robust solution and really with high regard. And there's others, like I said, we have 21.
That's awesome. It's awesome to hear that. And I guess also being a startup also affords you to plug into this startup community life, right? There are, I think you guys have also gotten the attention of the Connecticut Tech Council recently. Tell us a little bit about that relationship and anything that's come out of that.
So the Tech Council, we've been involved on and off over the last number of years with them. We've had some of our investors have been on the board, and even Chairman Luis Hernandez, who was chair of or the CEO of Open Solutions for many years here in Connecticut, has been very active there. And so I'm really just starting to get reinitiated with the Connecticut Technology Council. But I'm pretty excited. They named us last year a technology company to watch, which is a pretty nice accolade for us, being a small company. And awareness is so super critical for us because one of our biggest challenges is getting the word out that we're here. So, getting affiliated with a group like the Connecticut Technology Council is very important. It gives us exposure. It allows us to network with other technology companies, and that leads to new business. And we hope to return the favor by offering those companies that have helped us, we pay that back, pay that forward. So that's one example. Connecticut Innovations is one of our investors here in Rocky Hill. They have been an investor for a number of years. They've reinvested in the company a couple of times now.
That's awesome.
And they've been super supportive and helpful as well in terms of not just the funding, that's a big part of it, but they've helped us find good people. They've turned us on. They have some programs where, one in particular, where they've helped us with our marketing efforts around a company and product positioning, and have brought us really good resources that we haven't had to pay anything for. And so we love those kind of relationships and really appreciate them.
So Jeff, tell us a little bit about where, it's an exciting story so far. What's the next step? What's the next chapter in the PayVeris story? Where do you want to go from here in the next year, next 2 years?
So one of the things that I love about PayVeris, and the reason I joined, is because we have a very unique model and a unique value prop relative to what else is in the market. And we have a platform that holds a number of different solutions on that single platform where nobody else really does it like that. So today we have things like bill payment. So think of it this way. You can pay yourself by moving money from your bank account to a brokerage account or vice versa. You can pay another person. You can pay a biller for a bill that you have. Another use case would be paying a merchant. So you close this session out, you go grab a cup of coffee. You could use the PayVeris mobile wallet to make a payment at a merchant. So we continue to see the platform extend out into new innovative ways to make payments. Some of that's driven just by new markets. So one of the markets we want to get more into is business-to-business payments. Like 70% of all payments today that are B2B, using our vernacular, are paper-based.
Yeah.
Ton of paper. So we can come in with our digital platform and say, look, we can eliminate that paper, give you faster payments, more risk-free payments, and much lower cost. We're 100% in the cloud. So that's an area that we want to focus on, but also just in terms of thinking about the new devices out there, wearables. So imagine a time where you can, instead of picking up your phone and typing in a payment, you can just speak into it and say, pay my bill. We're working on things like that as well. So a lot of innovation yet to come. And that's one of the things when our customers sign up with us, and we have some quotes around this. Why did you pick PayVeris? Why us? It's because they say we're thought leaders, we have a vision, and they think of us as being innovative. We love that. So we want to take advantage of that accolade and continue to prove that out. So we do have a long runway left. We're really just getting started. We're only 5 years old, and we're starting to see that. I call it the heel of the hockey stick, where it starts to go up the long part. That's where we are right now.
That's the fun part to be in, that inflection point where the graph changes. Right?
We are at that inflection point.
Yep. So great. Are you ready for our lightning round as we close out this interview?
Yes, sir.
Okay. So everyone always wants to know how CEOs and leaders at the top C-level suite and above tend to do so much more than everyone else. Can you share a little bit about your personal productivity secret sauce? Is there a digital resource or a productivity approach or philosophy in terms of getting your work done or collaborating with teams? Is there something you can share with us today?
Yeah, there's a couple of things that I think are important. One of the things we use, and it's a company-wide tool, is Salesforce.com. So that's pretty prevalent in the market, but we have really expanded our use of that. Pipeline, as you can imagine, in a growing company that's trying to create a lot of sales, it's very important to stay on top of what's in the pipeline so we can tell our board and our investors
Definitely.
And see what's coming and forecasting that. So Salesforce is a tool that everybody's using. When I started, I think only a few people, really the salespeople, were using it. Now, pretty much the whole company uses it. Yeah, and we want to use it for things like customer service, customer support. The other thing that I think is important is in a dynamic environment where the blessing of being a small company is you can pivot and you can be agile and nimble. It's easy to get out of a line with from the product, marketing, sales, development. It's easy for one part of the company to get in a different swim lane than the other part, and that's not good. So having regular alignment meetings, what I've learned is, the traditional thing is you have a strategy meeting and you set your strategy and you go, and next year you do the same thing. Well, that's not enough. You've got to revisit that strategy and make sure everybody's aligned, kind of like you're always checking your pulse. You got to check your pulse pretty frequently around alignment, and that's something that I'm trying to do more and more. But I do that the old-fashioned way. Get the key leaders in a room, and we sit down and we all stack hands at the end of that meeting on alignment.
Interesting. Yeah, it's one of those things where you probably want to do it more often than you feel comfortable doing, right? To making sure you're doing it often.
It's easy to push off, but it's really important, because if you get out of line, then that means that we're not rowing in the same direction. So
awesome. Okay, second question is, what author, speaker, innovator, thought leader in the industry or in business in general is catching your attention that you're following, that you respect a lot right now? Yeah,
so there's a lot of payment oriented publications. American Banker, of course, is a staple that we look at often. There's payments.com. There's all sorts of payment information out there. Glenn Brook does a lot of work around payments. So we look at all that. I like Digital Transactions a lot. It's a publication out of Chicago. The editor there is John Stewart. He does a real nice job. He doesn't cover just payments is a big category, obviously, because you've got B2B, and you've got bill payment, and you've got merchant payment. They cover kind of the breadth of that, but they oftentimes have some very stimulating articles that I think are a little more edgy around what's happening in the payment space, and they're not afraid to be critical to the space. If we're doing something that may be questionable, they're pretty quick to call it out. So I kind of like reading that one as well.
Sounds authentic. I like that kind of
yes.
approach. Yeah. Last question is, if people want to get in touch with you, what's the best method to do that?
Well, in today's world, you're on 24/7 pretty much. I can't tell you how when I actually turn off, maybe when I'm on an airplane, I can't talk to anybody, at least right now. But email's always the easiest, most efficient, because we're pretty much checking emails around the clock, except when we're sleeping. And everybody's on the go. I travel a lot. The team travels a lot. So at any given time, you squeeze in time to talk. But a lot of times, you just can't quite have that conversation. So email is still kind of the baseline staple for me. But I'm constantly on the phone really at all hours, talking to different people. Our company, even though we're small, we do have a number of people that across the country. We even got a resource in Hawaii. So we cross a lot of time zones and, have a lot of calls and meetings as well.
Nice,
but,
nice.
Email's probably the easiest.
Awesome. So thank you so much for taking a part of your day to share with us the PayVeris story. It's exciting to hear where you've come from and where you're going. I'd love to check in with you and see where you guys are at the next milestone. But really appreciate the time that you spent with us today on the Venture Clash podcast.
Thanks, Kenny. Appreciate you offering to do this, and I really enjoyed it.
Awesome. And just for everybody that's listening, if you haven't checked out our website at ventureclash.com, you'll find this episode as well as all others from our podcast series interviewing startup venture entrepreneurs across FinTech, InsurTech, and the digital health spaces, as well as learning about our $5 million venture competition for Venture Clash. I'm Kenny Jang, the host of this podcast. Thanks so much for chiming in, and we'll catch you on the next episode.
Thanks for tuning into today's episode of the Venture Clash Entrepreneurship Podcast. Drop by www.ventureclash.com as to learn about the $5 million Venture Clash Startup Challenge. We've set aside millions to support your innovation and product offerings. Venture Clash is also the place where you'll find the resources you need to help grow your business. Check out the contest at www.ventureclash.com today.